Well, happy Thursday. Thanks for joining us on Trius Lending Partners Effortless Real Estate Investing. My name is Josh Shine. I'm the CEO of Trius Lending Partners. I have my esteemed colleague, Jessica Franta, Investor Relations Manager. The picture has the hair down. The video is
Oh,
live with the hair pulled back.
that's right.
We're ready for work. Happy Thursday. Jess, great to see you. What we hope to accomplish today, and thank you all for joining us and listening to a little bit about Trius Lending, about who we are, and about how to invest with Trius Lending Partners. We hope to accomplish in a pretty short amount of time. We try to keep these pretty brief. We value your time. We know everyone's really busy these days, especially leading into the holidays next week. We're trying to spend 30 minutes, no more than that, but always open for questions and answers to just understand a little bit about what we do, investing in Trius Lending, investing in mortgages, investing in first lien mortgages, and what a really safe, great investment option it is, the great track record we have. So we're going to talk about what we do, who we are, how we've gotten here, and how you can invest with us in a safe and secure way. A few basic housekeeping items. If you have questions, please use the Q&A button, which should be on the bottom of your Zoom screen. Hopefully you're logged in through Zoom. We might be having some people on social media as well. So if you're on there, please feel free to put a question below. We'll try to get to it. If for some reason we don't get into the questions, our contact information will be up on the screen at the end, I believe, of the brief presentation. Feel free to reach out to us as well, and we'd love to answer any questions. And that interactiveness, as much as we can, is always a huge plus for us. Any questions we can have, any questions we can answer. There's no bad question, there's no dumb question, there's no silly question. Happy to help with anything we possibly can to make sure that everyone who joins us and everyone who listens in can understand what we do, who we are, and how we can make sure you understand everything about investing with Trius Lending Partners. Okay, so let's talk a little bit about our company, who we are, how we got here. So our quote on there from our esteemed chairman, my partner, Steve Bond: our purpose is service and to be a cut above everyone else in what they do and how they deliver their product. So we are all about service, right? Our story starts with service. Steve Bond started this company back in 2003. I came on about 9 years ago. Steve Sless, our COO, is in that picture there. Jessica Franta is on with me now. She's been with us for a few years. Steve's been with us for a few years. So we're building up a really great team. We started off with providing lending funds to real estate investors in the greater mid-Atlantic. Originally, Steve Bond was doing it in the really Baltimore region, the city and the county. People were coming to him and saying, hey, I need some money for real estate investing. I'm going to flip a house, or I'm going to buy a house and I'm going to renovate it and then rent it. And so they needed that money to do that. And really, they needed quick, easy access to funds. And that's what we're all about: incredible service and quick, easy access to funds. When you go to a bank or other traditional lenders, the process is a lot more cumbersome. And so borrowers come to us for the ease of accessing funds quicker and easier than they would with a bank. And so our basis for everything we do, and if you have time after this, please go on to Google, check out our reviews, read some of the stories that tell people about who we are. It's mostly borrowers. There are a few investors on there as well. But it's really nice to learn about how we work with our customers and how service and attention to our clients and to our investors is really what we stand for. And really, our top most important priority is providing that service at all times and not being sort of your standard cookie cutter corporate enterprise. We're trying to really be different from that. And we think that's what sets us apart. All right, Jess, why don't you take a little bit of this one and then I'll chime in.
Right. So you fast forward, and obviously, as Josh mentioned, we've been doing this for a while. All of the leadership team. I mean, another cool part of the story is that we've been working together for a while. My personal history with Trius goes back to 2019, when I was a borrower. Steve and Josh worked together on and off for a couple decades, as well as Steve Sless, our COO. So what does that mean? We have an incredibly strong reputation on Google. I think we're over 350 five-star Google
Yeah,
reviews,
yep,
Josh. Is that where we're at?
yep,
I mean, it's
correct.
something we take an incredible amount of pride in. The level of our customer service, our reputation for a level of customer service, and delivering what we say we're going to deliver, both on the borrower side, which is not really what we're here to talk about today, but it translates to value for our investors. So, these things are absolutely interlinked and they're really meaningful. So, strong reputation, well known, and of course, over 1 billion in closed loans. So, We know what we're doing. We're good at what we do. And that really is going to, we'll get a little bit deeper into what closing a loan actually looks like, what comprises the underwriting and issuance of a loan. And again, how that really translates to our investors and safety and, safe conservative loans as we issue those. We've done over 4,000 loans funded. Again, a lot of experience. All of this is throughout the Mid-Atlantic market. So you are not going to find us in these hot markets, Austin, Texas, parts of Florida that have been on fire, but right now are kind of looking more shaky. We're Mid-Atlantic market, it's not the sexiest, excuse my language, it's not the most exciting
Right.
market there is. And we love that. That's great because we don't have the high highs, but it also means we don't have the low lows. And moreover, because we're doing these repetitions, we're doing these reps, hundreds each year, approaching thousands, we're incredibly good at underwriting what we do look at, and we know the area incredibly well. And the company's grown, so a fun part of the story is that, Steve Bond, Mr. Steve, as I call him, he started it, started working out of his basement, started working out of an office. And as it grew, of course, now we have a formal office in Towson, Maryland, and we've grown to about 30 employees. So we're small, but I think we feel pretty big. And I think we feel big in the level of customer service, what we do, and really how we do it.
Everything, obviously, Jess hit everything nail on the head. What I would also add to that is it's really been a slow and steady growth. So it's been a long time, but we've intentionally sort of controlled that growth and not gotten too crazy. And that's a really important part of the story is that we've had opportunities to jump ahead and maybe grow a little faster, get a little crazier, double the volume. We've really wanted to make sure we can handle the deals, the loans, our investors, the servicing of our loans, which we're going to get into in just a minute here, the underwriting of the loans, and ensuring quality and safety is always number one. If we're not doing good, safe, top quality loans, we're not protecting our investors, we're not protecting the company, we're not protecting our employees, we're not protecting the ecosystem in which we exist. So it's very important that we take the time and attention to detail to be diligent on all of the details that make sure a safe and quality loan is always taking place. And so that means we control the growth a little more, that we don't get sort of out in front of ourselves and try to take on too much at one time. And that's a really important part of the story. And Steve Bond, who you see in that picture there with one of our people as well, Steve has always been a really big advocate of not jumping too quickly, walking before we run, slow and steady wins the race, that kind of thing. And that's really been important to us. In that slide there, we're more than transactional. It's a really important part of the story. And I know Jess will have some words to add here as well. We're all about the relationships, as I mentioned earlier a few minutes ago. It's about having someone that an investor, a borrower, can call up and say, "I need money quickly. I've worked with you guys before." 40% of our borrowers are repeat clients because they want to be able to reach someone on the phone. We're pretty much accessible 24/7, 365, right? We're always
Yep.
available because real estate really never sleeps, quite frankly, right? There could be a deal on a Saturday, a Sunday. I've been out at Saturday night and done a pre-approval letter for a borrower, right? And the same thing goes for the investors who fund the loans, right? So let me take a minute and just explain the dynamic here. So we have over 400 loans, nearly $150 million in loans that we've lent out to people for real estate investing. Okay. And what we've done is we've raised private funds. So if you're on this video, this Zoom, this presentation right now, you're interested in learning more about raising of the funds and providing the funds. So we've had investors with us for 20 years who've given us their funds. They've trusted us with their funds, a portion of their funds, of their savings, of their assets. We've then taken that money and lent it out on first lien mortgages to real estate investors. And that relationship and that dynamic from beginning to end, taking that money, lending it out safely and smartly is really an important part of the story to make sure that we do quality loans and not have defaults. We have some defaults here and there. We've never passed it along to our investors. So no investor has ever lost money. No investor has ever missed an interest payment. No investor has ever had their principal reduced or curtailed in any way. So principal preservation and a steady, consistent return of between 8 and 10% annualized every year, year in and year out. And that's a really important part of it as well. So we'll get into a little more of that detail in a few minutes as well. Jess?
Jess is coughing.
Oh, sorry.
I'm so sorry. No, I think one thing I really wanted to add We are not a lender of last resort. So, and again, a little bit of my background. So, I head up investor relations for Trius Lending Partners. How I came to Trius Lending Partners is that my husband and I were borrowers. So we are kind of that statistic you see. So before I started working for Trius, we had actually done 9 loans. So we had borrowed money from Trius Lending Partners on 9 different properties. And what we were doing was building our own rental portfolio. But more importantly, especially as it relates to our investors, we were gaining experience, we were growing our own personal assets, and every single one of our borrowers signs a personal guarantee on that loan. And I know Josh is really going to talk about the how and the what's and the whys as it relates to like the underwriting, but that's really important, that's critical, because that safety and security, the more that our borrowers have in play for each and every single deal, that translates directly to our investors. And I think it's a huge part of our story. But moreover, and again, I can speak to it personally as a borrower, I was a great borrower, I'd like to think. And my husband and I, we had a lot of options. There's a lot of other private lenders out there, but in working with Trius, and this goes back to the reputation, doing what we say we're going to do, closing when we say we're going to close, and really following the processes that we outline to everybody, all stakeholders. I always knew we were going to close the deal. And I feel badly still to this day, but I do remember reaching out the day after Thanksgiving saying an amazing property hit the market. And if I was going to be able to secure it, I had to do it Thanksgiving weekend, and Trius did it, and I won the deal, and it was just an absolutely fantastic deal. So there's a lot that goes into that statistic of the 40% of return borrowers. And I think that's why we really, kind of expound on it.
And and it's funny you brought up that point of the day after Thanksgiving, coming up with Thanksgiving.
Yeah.
What people don't always understand, and it's worth me taking a minute, and then we'll get into how we choose the loans and the underwriting process in a second, is speed. Speed matters. A lot of people say, why would someone come to you? Because we're not the cheapest way to access money. If
Mhm.
you go to a bank to borrow money for an investment property, it's generally less expensive than we are, but it's going to take a lot longer. In a competitive market, competitive real estate market, and I'll put a little asterisk, joke, ha ha, every market is competitive, right? It doesn't matter where you are. Inventory is tight, things move quickly, investment properties and opportunities come up quickly. There's a lot of investors, local, regional, national investors scouring the market for opportunities. So if you're going to get a property, you have to move quickly. So Jessica's story of the day after Thanksgiving trying to get in a property, that's a really typical scenario. And I'll use that story to take us all the way through the next few images on the slide here. Someone needs and is looking for investment property for a flip or a hold. Either one, it doesn't matter. It may or may not involve rehab. Generally, it does involve rehab because your idea is to improve the property and sell it at a profit, or improve the property and rent it at a higher number. In either one of those situations, you're going to go to, say, an open house, and you're going to visit it, or maybe a friend told you about an investment property for sale, or it's not known as an investment property, it's just a home for sale. Maybe someone passed, maybe someone moved, and they are eager to sell it. We had a deal recently where it had been on the market for 120 days, and our borrower said, you know what, I'm going to go in and lowball this property. I think there's opportunity there. Coming in at lower than asking price because it's been sitting at asking price for a while and they haven't sold it yet. So when you go in, if Jessica goes in and the person's selling the house for $300,000 and she says, I'll give you 280 and I'll close in a week with us, with a private lender. Okay.
Mhm.
And I'm the other person and I go in and say, I'll give you 300, but I'm using bank financing. I need at least 45 and maybe 60 days to close. If you're the seller, you're going to say, and I'm willing to take a little less for a sure thing, as is purchase, all cash, which is what we're considered when people do an offer with us. And it's a private lender that's closing in 1 week, I can have my money. Or take the risk of maybe a little bit more money. Maybe they don't close. Maybe they have to extend. Maybe they have problems. Maybe they don't like the inspection. Who knows what happens? Most people, bird in the hand. You take what you can get. So someone like Jessica in that situation many Thanksgivings ago was saying, hey, I need a pre-approval letter. I'm going to go in and I'm going to tell them I'm ready to buy it right now as is, close in a week or two. That's the idea with private lending. That's the idea with coming to Trius Lending Partners. So that's why people do come to us and pay a premium to come to us quickly and get stuff done. So after Jessica, for example, got that property under contract, she's then going to probably reach out to Dave Bond and said,
Yep.
Dave, I'm ready to go. Dave's going to say, okay. If maybe it was one of her first times, or if it was repeat, he might have had some of the documents. But at that point, we're going to look at everything: income, assets, background check, credit check, all the properties you've owned, your income, your savings, your retirement accounts. We do a full underwrite. No different than any other bank or lender you might have borrowed money with at any given time. We do it faster, we do it easier. So we're going to analyze that information in an hour or two or 24 hours maximum and not spend weeks in loan committee trying to come up with a decision. We're going to make sure you have an ability to afford the payments. You have a credit history that shows you pay your bills on time. You have an ability to put money down. We require skin in the game from all of our borrowers. That shows they have a vested interest in this property to make sure that they're putting money in, paying closing costs, making monthly payments, and that they can't walk away from this. They've put money in the game. If you have skin in the game, you stay in the game. That's what we like to say. We're going to make sure you have savings in case something goes wrong. If you don't have experience, we want to know that so we can help walk you through it. We don't require experience, but we want to understand what we're getting into. And then we're going to look at that scope of work, the amount of work you're doing on the property, and make sure the math makes sense there. And then the background check and credit check is also seeing how your history's been. You know, people have speeding tickets, no problem. But if there's other legal issues, we may not offer the loan to you. We want to make sure we're working with a quality borrower with good credit, good income, good assets, and a good track record essentially in life and especially in real estate if they've had that as well. While we're doing that, we're looking at the properties as well. So we're going to vet the property, inspect the property, look at the property, and make sure the value is there as is. And then the ARV, the after repair value, which is what it'll either be sold for or what it'll value at when you try to refinance afterwards. So we do all that very, very quickly, generally within a few days. Okay. And a lot of hand holding with that borrower, meeting, talking, discussing. It might be a Teams call, a Zoom call, a phone call, a meeting in person at the property, any or all of the above to really make sure we're showing them what we do, how we do it, and they're understanding the value add and the support that we provide. And we're making sure we can get eyes on everything going on with this transaction to make sure we're safe, our loan is safe, and our investors are safe as well.
Yeah, just to kind of summarize that again from a borrower's perspective, and really again as it translates to safety and security for our investors. From a borrower's perspective, it feels a lot like getting a conventional mortgage. They're looking at all the same things that I had to provide to buy the primary house I'm living in right now, but it's on a non-conventional property, meaning this property would not actually pass through a conventional mortgage because it wouldn't pass the appraisal and the inspection, right? There's maybe foundation does need to be repaired. Maybe you need all new windows or there's a roof leak. Like that is part of the assumption. These properties typically, to Josh's point, you have not just the acquisition of the property itself, but that rehab and we Trius Lending Partners and our team who are really experienced in underwriting, they're looking at all of that and they're making sure, this is an extreme example, but if a borrower came and said, well, I think it's just paint and carpet and I need 20K, but we can see the roof is hanging off the side of the house. Obviously, there's a mismatch there, and that's part of the guidance and consultation, with the borrower through that process.
Yep, absolutely. Okay. So a little bit of sort of just to end the sort of story of the loan process, right? Essentially, after that underwriting was done, everything looks good. Within a few business days, we work with the title company. We record the loan and close the loan, fund the loan. So essentially, it's a first lien mortgage on all properties. We always close loans to make sure there's equity in the properties. So we generally look to limit our exposure to 65% of the after repair value is the maximum amount we will lend on what that property will be worth after the rehab is done. So it's a very safe loan, only and always in first lien position. And as Jessica previously mentioned, personal guaranteed by everyone. And that's a really unique and important characteristic to make sure everyone understands on. These people are personally signing their personal assets, their personal home, their personal everything is essentially on the line by personally signing on this loan. So it's really secure and really safe, and it's real property. It's a piece of physical property sitting on a plot of land, whether it's a city property, a row home, a house, a single family house. We do small commercial, not office properties, but small strip center, a small standalone pad site, a small manufacturing or warehouse or something like that, we do as well. So as Jessica said, and you can see from some of these charts here, we do most of our business in the sort of greater mid-Atlantic, which we take to mean Maryland, PA, Virginia, and DC. That's the majority of the business, as well as some other states as well. As we've continued to expand our business, we've been heading down south a little bit into the Carolinas, into Tennessee, into Georgia, and into Florida as well. Very case by case, very specific approach to that. Our loan terms range from 6 to 9 to 12 months. And you can see there's a little variety of the different types of loan terms. Most loans pay off in 9 months, depending on how big the rehab is and how long that person needs it for. They might choose the 3, 6, 9, 6, 9, or 12 month options, and they generally are going to pay off, like I said, in 9 months. And the loan amounts. So we generally are in the smaller category of loan amounts as a company. So we don't do $5 million loans and $10 million loans. We like to be 150, 200, 250, $300,000. Those are really great areas for us. We're doing a lot more 500,000 to $1 million these days as well. But above $1 million is pretty rare for us. And below 150, we do very, very little of those as well. We're trying to do larger loans. Our average loan amount right now is 400,000. So that's a nice sweet spot we like to be in for right now.
Now
All
I'm
right.
excited. Yeah.
Yeah. Okay. Jess, take us
Yeah.
away.
The fun part, investing with us. So, with all that being said, there's really two major primary investment methods. So, throughout this, Josh and I have been talking a lot about singular properties. And so that's kind of the first, it's actually listed second, but it's called note investing. So it's just really like industry term, but it just means investing on one single property. So, that is really with my office. You work very directly with myself and my team, and everybody is welcome to invest in this product. So it's open to both accredited and non-accredited investors. If you're watching this tonight and you're like, am I even accredited? What does that even mean? You would reach out to me and we would get it figured out. But no worries, because in either case, the direct note investing, investing on single property is open to both and everybody. So that's a really fun part of that one. It's a tailored investor experience. We definitely sometimes have newer investors start out on a singular property just to get a feel for what that looks like and to be able to have more specific conversations with myself and my office looking at some of these properties that we have issued loans on and kind of talking about that, the loan to value, the location, all of those kinds of things. Like I mentioned, it's open to everybody, and it's also open to 401k and self-directed IRA and regular Roth and regular IRA rollovers. We've actually seen an incredible amount of growth in investors doing that as they look to kind of lessen their exposure to the stock market in particular, maybe diversify their portfolio, and or especially we've got a lot of investors that are starting to approach retirement and kind of want to make sure that they've got safe, steady, consistent income where they really are also preserving principal. So it's a big part of what we've been supporting with our investors, and you can do that with direct note investments. With regard to kind of what I was just talking about, safe, steady, and income, both and actually both investment opportunities, we pay out the interest monthly. So in the case of, a direct note investment, you get paid out on the 20th of each month. And it's just pretty much clockwork. So that's direct note investing. The fund, the Trius Fund One, is our other investment method. It's actually the majority, I'd say about 65% of our investors are in the fund. The remaining 35% are on notes. The fund is really popular and preferred by a lot of investors for a couple reasons. Before I kind of get into it real quickly, though, it is only open to accredited investors. And again, I reiterate, if you're like, what does that even mean? Reach out to me. My contact information will be at the end of this presentation, and we'd get you sorted out. So no worries there. The fund also, before I get into some of the differences, is also open to self-directed IRAs, 401k rollovers, and any kind of like-to-like retirement account. So again, it offers a lot of those same benefits, same diversity, and all that. The fund is a pool of these same loans. So really, and I sometimes, as I describe it to newer investors, I call it almost like a living organism. So it's a pool of about 250 loans. And really, on any given day, you might have a loan pay off, and then therefore we might add a new loan into it. It is more passive. What I mean by that is, with direct note investing, we're having this conversation, the prospective investor, myself, about that property, or I'm presenting a particular property. The fund, because it's, continuously going, it's you kind of get to sit back and just really enjoy the monthly returns. You don't have also the turnover of a direct note. And the fund has a couple benefits. You can elect to reinvest your monthly income, interest income returns. And it also has a sub-REIT structure, which really provides a lot of tax benefits. And again, I won't get too deep into it. A lot of these we take to later conversations when folks want to learn more about what does the sub-REIT structure mean, to an investor. And also, it has a qualified business income deduction that's available on an individual basis to investors. What is all of that? I like to kind of take that and actually delve into it more seriously in a conversation. But that enhances the return to our investors, these advantages for the fund. And again, it's why it's really become, for a lot of our investors, the preferred method of investing if they're accredited and if that's something they can go into. Average 8 to 10% across both investment opportunities. And Josh, was there anything, did I?
Yeah, no, great cover all. A few things I would add. $100,000 minimum investment is what we require from people. There's some flexibility there, but generally that's the requirement. The 8 to 10%. Someone's gonna say, what does that mean? It's a fixed debt fund, and the notes are fixed as well. So it's a fixed return. It depends on how much money you invest, and that's something we would talk with you on a one-on-one basis. But know that when we fix what you are investing with us, the return stays steady, does not change. And I mentioned that track record. So for 23 years, we've been taking investor money from the outside, using those funds to then invest and fund real estate investors doing fix and flips and fix and holds and bridge loans. During that time, no one has ever missed an interest payment on a monthly basis, and no one has lost any principal. So this is a great diversification play. Today, another day in the stock market that was brutal. You don't have that with us. We don't have the ups and downs. We don't have days when your investment drops 1%, 2%, 3%, or if you were in the high tech stuff in the last 10 days, 6 or 8 or 10%. That does not happen. Your principal stays exactly where it is. So if someone gives us $100,000, they earn 8% annualized, paid every month. Period. End of story. It's an electronic payment that gets sent into your bank account on a regular basis, the same time every month. No questions asked, no ifs, ands, or buts, and no times missed at all. Period. So a lot of investors do with us, a lot of our current investors who have been with us for many years, and certainly the newer ones as well, this is part of their diversification play. We're not a financial advisor. Please seek that advice from a professional as well. But having said that, a lot of our investors have stocks and bonds, maybe some treasury bills as a very safe alternative, maybe some real estate on their own. This is sort of in the bond category of the treasury bill type of thing. A T bill right now with the US government backing it is paying 3.5, maybe 4%. With us getting 8, 9, or 10%, depending on how much you invest with us, that's double that return. And it's a very safe return with a first lien mortgage and a 23-year, 22-year track record. So that's a really incredible thing to look at, backed by real estate, backed by actual property. And that's really important as well. It's not investing in some stock or Bitcoin or Nvidia or Tesla. Not that those are all bad, but depending on how you look at that stuff, those are considered higher risk, higher return, okay? But there's downside risk as well. We don't have that upside potential of making 30% next year with Trius lending. That's not possible. You're only going to make 8, 9, or 10%. But you also have no exposure to it going down to 0% or losing your principal. And that's a really important distinction as well. That's why a lot of investors love having their money with us, some choosing to reinvest the dividend and grow it over time, and some choosing to say, I'm going to take that and use that money to pay my bills, to live on it, to do whatever I want with it on a regular basis. And any one of those options is perfectly fine with us. So it's a great diversification play as you're continuing to build out your time in the market and your plan for maybe retirement or post retirement. I was talking with someone today and we were talking about, we have people who've been with us since 2003. Think about how many times they've doubled their money during that time. When you talk about the rule of 72, we can have another Zoom webinar on that as well, but just compounding and growth of money over time, how valuable that is to be able to have money at a fixed return that is just working for you all the time, nonstop. It's really valuable. It's really impressive. And it's really one of the ways and one of the paths to wealth. So we really like to promote that as well. And the safety of it is incredible. And that's really what we like as well. So essentially the next step in the process is working with us. These are examples of some of our investors, and we have videos, we have testimonials, we have people you can talk to if you want as well. As you can see, we have people who are younger, people who are older, men, women, you name it, from all walks of life, all different businesses, all different backgrounds, some working, some retired, you name it. Every one of the investors who's with us, and we have just over 200 right now, I would say,
Yep.
probably over
Yep.
200 investors. Jessica and I have met personally. 99.5% of them, right? A few of them, we
Hmm.
have a few recent ones who are a little further away. I haven't been able to meet them in some
Yeah.
different states, but between Mid-Atlantic and Florida, we've met them, we've sat with them. We make sure to be available for calls, for issues, for questions, etc. And that's really what we're all about. Again, relationship, service, conversation, communication. That's what we think is the most important part of the process, and understanding and learning what it is we're doing, asking any questions to make sure. I said this to someone the other day at a meeting I had. This should be an investment where you can sleep like a baby at night. Okay, you can sleep well when you put your head on the pillow. Whether it's 100,000 with us, we have people who have five, six, $8 million with us. Those people all sleep well at night, knowing that they've entrusted their money with a safe place, with a great track record, tied directly to real estate, with accessible people. We're not in a big high office tower in Manhattan or who knows where, right? We're local. We're here in Maryland. All what we do is managed out of our office in Maryland. We service all the loans. We pay all the investors. We do all the taxes, the insurance payments. We handle all of that out of our office. Our sales takes place out of our office. Our underwriting takes place out of our office. We have some remote employees as well, for sure. Nothing wrong with that. But my point is, we don't outsource any of what we do to anyone. Our CFO and our accounting team is in office as well. We have a great staff and a great team that knows that our investors are our most important value and most important commodity and asset to the company. And we take special care to make sure they are taken care of at all times. And then, of course, some of the pictures you see here, who we are and what we do. Jessica lives on a farm, so I'll let Jessica give that picture. But we're involved, very involved in the Alzheimer's Association. I'm on the board there. You see some of the staff. We have some
We
fun
love to
times
eat.
with the
Lots of
group.
donuts.
We love food. We love food. We love Dunkin' Donuts. So and we just have a great time. Jess, give a little shout out to the goats, just because we have to. You know.
Those are two of the three goats. That's cinnamon and nutmeg. They're skeptical about selfies, but we're working on it. We're working
Yeah.
on their
Yeah.
stage presence. So yeah.
It's it's not every day you see goats in a presentation like this. So we like to shake it up a little bit. But if you have any questions, I don't see any right now. We have a bunch of people sort of listening in here, but feel free to ask any questions in the chat here. And our information is here, invest@triuslending.com. And that's also Jessica's direct cell phone number.
Yep.
We are accessible all the time. Any questions? Again, no bad one, no stupid one, no wrong one. We're happy to answer. And we're happy to sort of walk through what we just did in a more personalized one-on-one basis, right? So that is what we're here for, is to answer those questions and take the time. There's a lot of information. Jessica and I have had meetings with people, with prospective people, that go on for 2 or 3 hours. We also have ones that go over 10 minutes. We have people who we've met with 5 times in a row before they invested. And we have people who, after the 10-minute meeting, have invested. So we're happy to accommodate whatever pace and level of interest or information you want. Some people are really data hungry for details and information. We're an open book. We're accessible. We want to answer questions. We want to provide all those answers to anyone about any aspect of the business. Our office is in Towson, Maryland, right off Kenilworth and Charles. We're happy to meet with anyone. We've had people who want to come in, see the office, see the people, see that we're, a real business, and that's no problem at all. And we have people who I've traveled, Jess has traveled to other states to meet in person, and we do that as well. So we're all about that service and that connection. And we started off with that, and I want to end with that because that's what it's all about. It's not just being a random organization with people you don't know and people you can't access. It's knowing that as the CEO and one of the partners in the company, you can access me. As the head of investor relations, Jessica is extremely busy. But I can tell you this, she's always taking the calls and always answering the texts and emails. She's working with her team, building out her team as we continue to grow to be able to provide that incredible service for all levels of the team. And that's really, really important with us, for everyone to work with. So, Jess, anything to add?
No, that's it. Yeah, please definitely. That was my cell phone. Invest at Trius, go straight to me. And also if you invest with us, that doesn't end, right? So that level of service. And we've definitely had folks invest with us, look to grow their investment. That's a huge part of our story is the growth of our investors that have invested. And they want to ask the same questions all over again. And that's literally my job and why I'm here. Super passionate about it, and grateful. So, and thank you for taking the
So,
time to come tonight
yeah.
as well to
Yeah.
listen
Thank you
in.
so, thank you. So, yeah,
Yeah.
always. We always, I know
Yeah.
we never know what's a good time of day or a bad time of day, but we appreciate you taking the time and coming on with us. Went a little past 30 minutes, but hopefully not too far past. I ramble a lot. Jess knows that. The whole team knows that. I'll end with this. Please check us out online. If you didn't take down our contact information, invest at triuslending.com or triuslending.com. Check us out online. Check out on social. Check us out on Google. Read our reviews. Learn a little bit about us. You'll understand who we are and what we're all about. We would love to meet. We would love to talk. We would love to explain more. No pressure at all, but would love to be able to have a conversation with you if you'd be open to that. So please don't hesitate to reach out, and have a wonderful and enjoyable and relaxing Thanksgiving holiday.
Yeah.
Thank you
Bye.
all. Take care. Good night. Bye bye.